tax lady, and I made this video for you to talk about why it is important that you go ahead and file your tax return on time when you find out that you have a balance due, even when you cannot pay it in full. And there's two main reasons for this. One of them is that the IRS charges pretty hefty penalties when you have a balance due and you don't file on time. And the second reason is that you start the clock on the IRS for collecting on you. And this topic is really important to me because it just breaks my heart when clients come in and tell me how a few years back they didn't file on time because they realized they had a balance due because they had some sort of situation that year. And so they just didn't file the tax return because they didn't know what to do. And this is common. It happens a lot. And it's natural. It's human nature that we want to avoid things that make us uncomfortable. And so I just would really like to encourage people to please file your tax return on time anyway. And I'm going to go into more detail in this video on those two reasons. And I'm also hopefully going to give you some strategies on what you can do when you have a balance due. So let's get started. The first reason you might want to file your tax return on time when you owe is to avoid the failure to file on time penalty. This penalty is charged by month, and it is 5% of what you owe per month on the first 5 months. So in other words, within 5 months, you'll owe more than 125% of what you originally owed. And here's an example. Let's say that you owe $3,000 in taxes. 5% of $3,000 is $150. So at the end of the first month, you'll owe $3,150. In the second month, you're charged 5% of the new amount of $3,150, and so on until at the end of 5 months, you'll owe more than $3,800. But really, you're going to owe even more than that because the IRS also charges interest. Now, these penalties start the day after the due date of the tax return, and that's either April 16th or October 16th, depending on if you filed an extension. Interest starts on April 16th, regardless. Now, you might wonder what happens after these first 5 months, or what happens if you file it on time. Well, then the IRS charges a failure to pay on time penalty, and that penalty is 0.5% of what you owe per month, plus interest, until paid in full. So here's an example of that. If you go ahead and file on time, then in the first month, 0.5% of $3,000 is $15. And at the end of the first 5 months, you would owe less than $3,100, plus interest, of course. And if you remember, with that 5% penalty, at the end of the first 5 months, you would owe over $3,800. So it's quite a bit of savings if you go ahead and file it on time. Now, the second reason you might want to file your tax return on time is to start the clock for the IRS to collect. You see, the IRS has to follow certain rules called the statute of limitations. And I've written up here the definitions, the legal definitions of statute and limitations. But what it basically means is that there are laws in place that give the IRS a certain period of time to do certain things. And in particular, the IRS has a certain period of time that they can give you your refund, they can collect taxes from you, or they can audit your tax return. In this video, we're going to talk about the time they have to collect taxes. The statute that the IRS has for collecting taxes is 10 years. But here's the kicker. The 10-year clock does not start until you file the tax return. So if you decide to file your tax return 3 years later, you're really giving them 13 years to collect on you. Now, here's a term I wanted to share with you that within the IRS, it's called CSED, and it stands for the Collection Statute Expiration Date. And basically, it's the date that is 10 years after you file the tax return or the taxes are assessed. And at this point, the letters from the IRS stop and any liens they've placed against you are released. Another thing I wanted to mention is that there are things that you could do that would put a pause on that 10-year clock. And I'm not going to go into detail, but one of them is leaving the country for 6 months or more. And the other has to do with filing different types of paperwork with the IRS. Now, here's some payment strategies. You go ahead and you file the tax return on time, but then you're probably scared, well, what do I do? They're going to start sending me letters. Well, what you do is you pay what you can when you can. Even if it's just $5, $10, $20, $100, whatever you can afford, just send it when you can. You can set it up through online banking on your end where you're sending them a certain amount every month if you wanted to. Every time you get a letter from the IRS, you can make a copy of that first page and write them a note saying, please give me more time. I'm doing the best I can, and send $5, $10, $20, whatever you can afford. You could also get on an official installment agreement with the IRS. These take a little bit of time for them to get started, and they do charge a fee for it. You could also try for currently not collectible status. And this is when you can demonstrate to the IRS that the money you have coming in goes to pay all your bills and you have nothing left over. Then they will put you into this status and assess your situation in a few years. And remember, the clock is ticking, that 10-year clocking is ticking during this time. And then the last one is the offer in compromise. These are difficult to get, and this is paperwork that you could file with the IRS that's going to put a pause on that 10-year clock. And the IRS can take up to a year to process these, and oftentimes people don't get them. If you have any questions about any of these, feel free to contact me directly. So that's it. Hopefully this video has been helpful. If you have any questions, you can reach me through my website at kaythetaxlady.com, and Kay is spelled K-A-Y-E, thetaxlady.com. Thanks.